to kick things off, maybe you could just share your high-level thoughts about this topic, and in particular, maybe how technology and innovation is playing, a key role today in building brand equity.
Absolutely. Thank you, Simon, for that wonderful introduction, and pleasure to be here. So I think as we think about technological forces that are reshaping the landscape, especially across financial services, banking, insurance, payments, and kind of affiliated industries, there's a lot of innovation. There's new ways to get customer insights. There's the power of generative AI, of course. There's new ways to integrate with the vast arrays of data that has previously been siloed to make more informed decisions leading to better business outcomes. All of that, of course, comes at a cost, and a lot of the institutions, banks, and the like are racing to make those investments in the hope of paying off kind of downstream. So, as the landscape is evolving, I think one of the counterbalances to that is staying relevant in this age of the customer, and that's what we're looking forward to discussing with Meredith and the audience.
Awesome. Yeah, I think there's many great points that you've just made there. One in particular is the siloed nature of data and how that potentially impacts, customer experience and brand and those sorts of things as well. Meredith, you have such a depth of experience in building enduring brands. Take Bank of America is one of those. How do we ensure that technology and innovation amplify, not overshadow, core brand principles? Just would like to hear just some top level thoughts on that.
Yeah, I think that's the key to it right there, Simon. And I think sometimes people get confused or distracted that these things are tools, right? They're tools, they're enablers to help really modernize your brand. And in some cases, do things more efficiently or faster or quicker or better. And, we're going to get into some of those things, but it's almost like, I remember my boss used to say, she had this analogy of sometimes you can, be, under the car, the mechanic, working with the car and trying to figure out all the details under it. But don't forget, the car has to drive.
Yeah.
And it's about the brand at the end of the day is the big picture. What does that brand promise? And these things are in service of it. And I think that's just the watch out, in addition to, issues that we can talk about, with bias and some things that we're dealing with, or, other issues that come up with data privacy issues. And also, how do you use some of these things in your brand as an advantage? How are you embracing these and doing it in a really transparent way that using this, again, as a brand asset to help tell the story of how you as a brand are delivering in service of your client and what their needs are.
Yeah, wonderful. I'm going to zero in a little bit there, Meredith. You talked about, accessing and enabling these tools in a transparent way, which kind of really gets me onto trust, building, and the importance and that being sort of like, a fundamental foundational component of building brand. Share some thoughts just around trust for me.
Yeah, I mean, financial services, I think, unlike no other, are trust-based businesses. And if anyone who worked in 2008, 2009 knows exactly what I'm talking about when you were a brand that was very well trusted, or an industry that was well trusted, and you lost that trust, and what it takes to rebuild that, and how fragile trust is. And you can't take that for granted. And you need to continue every single day to earn that trust from your clients. And how you're dealing with technology is a really important opportunity to do it. So going back to what I talked a little bit about before, is this notion of transparency. The more that you can share with your customers how you're using their data, as an example, instead of hiding it in a 40-page document that no one's ever going to read, is if they're pulling the wool on you, instead of being really transparent and really clear. And we spent a lot of time in my earlier career making sure that we were communicating in a way that was easily understood. And that's one thing that, as an industry, I don't think financial services historically did the best job of being as clear and as simple and as plain spoken as possible. And I think as we embrace all this different technology, and particularly AI, how we are communicating in the most plain spoken way that people really understand how we're using some of these tools in service of them.
Yeah, some really good points there. Nitin, did you have anything that you sort of wanted to add from a trust perspective, there?
I'd say yes. I think there's been some technological advancements, and we're all, I think, familiar with blockchain and the hype surrounding that. But as one of the practical outcomes of that is the immutability of a lot of those records, whether it's financial records or other data, and as banks and other institutions leverage technologies such as blockchain, I think that allows them to also achieve compliance, which is often considered heavy and onerous as an operation to endure on a regular periodic cycle, quarterly, annually, and the like. So that's another example of really new and emerging technologies like blockchain impacting better operational outcomes for banks and insurers.
Yeah, absolutely. Meredith, I just before we move on from trust, I just am interested to sort of get your perspective as a senior leader. If you were observing across, the financial services sector, the banking sector, do you feel that universally brands have made good progress in building trust with customers?
I think they have. However, I think there's just natural skepticism out there. And I think with the rise of social media and user-generated content, there's just a lot of information, and sometimes the information is accurate, sometimes the information may not be as accurate. So I think it's harder and harder to do that because of the amount of information and disinformation that exists out there, which also gives you another platform also to tell your story. But I think it's challenging to do so.
Yeah, absolutely. I think, I as a customer of many different financial services, institutions, the lengthy long, you touched on the product disclosures and the 40-page documents and, information sort of buried there. And I do think that whole kind of ability to communicate in a very sort of plain language, informative way that's in the best interest of the customer, I can see 100% how that can really sort of help enable trust, more so. Nitin, I'm keen to sort of understand and explore a little bit about sort of omnichannel experience. It's been a buzzword, for a little while now. I think many industries, many organizations have a focus on omnichannel, experience. For me, just, in the audience, maybe just from your perspective, if you were to kind of define omnichannel experience and omnichannel, as a term, how do you sort of, define that?
Yeah, absolutely. So it's certainly very prevalent in industries such as retail and the consumer segments, as you'd expect. But omnichannel experiences are really about addressing a consistent brand experience across all your different channels and footprints. So a common example would be if you have a point of sale system, that experience for a client compared to a web front end or mobile app, an in-person such as a branch experience, or really any other virtual experience should be consistent with not only brand guidelines, but also in terms of the outcomes that people are expecting from those experiences. So there shouldn't be, for lack of a better term, a dysfunction between one channel or one touch point versus another.
Right. Dysfunction is a great word. I'm going to zero in a little bit on that. From your perspective and your expertise, why is this so challenging to realize for organizations?
So I think one of the challenges really stems from what the industry calls the Amazon effect. And I think at some level, we're all familiar with Amazon as a brand, as a powerhouse e-commerce retailer. And the Amazon effect, just to summarize that, really talks about higher customer expectations in this day and age, with a relentless focus on customer experience. And if you've dealt with Amazon, either as on the buyer side or on the seller side, if you've dealt with them in a customer service engagement, you'll know that they do whatever is required to make sure that that outcome is positive for you as their customer. So if it means a refund, if it means reshipping a product, if it means whatever that requires, they'll take care of it. And that's one of their core kind of guiding principles. What that's done to really the consumers is it's created this need to hold all businesses across all industries at maybe higher expectation. And now businesses really have to counteract to adapt in this digital age, and obviously meet or ideally exceed those expectations across, again, all of those channels. So an example would be if you have an issue with, say, a transaction, and you call in to a bank's call center, they expect that to be resolved in the same manner as it would be if you were to go into a bank branch. The call center agent shouldn't tell you, I'm sorry, I can't assist you, and you have to go into a bank branch, right? So because that introduces friction, which is really something that technology is designed to help overcome.
Yeah, sure.
Yeah, it's also that ability for these channels to speak to each other. So I think, to your point, Simon, you look at some of the legacy, firms who may not have been built de novo, who can build with all the pipes speaking to each other.
Yeah.
How do you ensure you have the infrastructure so you can understand, what a client maybe was served online, what their experience was in the branch, what the call center experience was. So the sort of the single view of that experience. So whoever is dealing with you, the customer, that you have that view of it. And I think that can be one of the challenges, and again, one of the benefits of some of the solutions that exist to try to tie those things together to get a true single view of the customer experience.
Yeah, the single view of the customer, I think, is, it sounds relatively straightforward to achieve. And maybe on the sort of the digital disruptors, the newer organizations that are emerging that are not hamstrung, I suppose, by this legacy infrastructure, things like that. Nitin, from your perspective, why is it so hard to realize, this kind of single sort of view of the customer, certainly for large, tenured organizations and brands?
I think customer insight really stems from, or better customer insight stems from a better understanding of your data. The challenge is that historically, a lot of the data has been siloed across these large organizations. So if you have a retail banking business unit, that's not really operating fairly independently from a wealth management business unit, an insurance arm, a credit or a lending arm, a mortgage arm, and so on and so forth. So now a key facet of, again, gaining better customer insight is integrating across the organization, tapping into all of those data silos, leveraging big data, leveraging analytics, of course, AI as well, to get that, as Meredith was saying, the 360-degree view of the customer. So if a client is coming in, regardless of what channel they're coming in from, their profile on what type of mortgage they have, what their credit history is, what other products and services they are subscribing to today, and maybe also some recommendations or guidelines in terms of what to offer them. Maybe there's some special offers, could be seasonal, could be just based on their spend. Loan aggregation, a variety of other things, right? Just to help agents, could be virtual or human, make more informed lending decisions. That would be a very operative, I guess, business outcome. Again, irrespective of what channel these clients are engaging with.
Yeah, sure. And these legacy systems, sometimes it could be because of acquisitions of organizations. It could also just be the siloed nature of how internal teams are sort of measured, their impact is measured, their reward, those sorts of things. I mean, here we are today in 2024, and I feel as though, having come from the New Zealand and Australian market that, has a big focus around customer relationship and retention of customers and those sorts of things as well. This is a discussion that I feel has been going on for 15 years. And yet here we are today, I will receive, from a leading kind of credit card, financial services organization, I can receive 3 different communications in one day, one of which is trying to sell me a product I already have. So why do you think organizations are not prioritizing and investing in getting this fixed?
I think one of the challenges really has been the technology debt that they carry. So as they've grown, oftentimes through acquisitions and mergers, again, throwback to the financial recession from a few decades ago, they've just evolved to the point where they have a lot of duplication of systems, of applications, of channels as well, and it takes time to rationalize that. At the same time, they're expected to maintain a certain pace of business, a certain growth in their operating units, and of course, it's one of those things you never ever get to. So a lot of them are still operating core banking systems on mainframe platforms, and struggling to find developers and programmers to keep those systems updated, just because a lot of those people have retired. And moved on in other ways, and that creates these real world challenges. So now we're finding a lot of banks and insurers, financial institutions globally are leveraging APIs to tap into and across all of those systems to improve, again, the overall customer experience. So they're investing in data platforms, they're investing in API platforms, and more recently, of course, AI gateways to again, break down those silos, metaphorically, and again, gain better insights. But the challenge is that tech debt just keeps ballooning, and that's where those fintechs and other disruptors, the online-only banks, for example, have a very clear advantage in terms of they don't necessarily have the scale, but they have the speed of execution in terms of setting up new systems, setting up new applications. They don't have to worry about these technologies of the past, which can be a hindrance.
Yeah, and it's also where, to that point, is where the pressure or the desire or demand from the marketing organization, recognizing exactly what you just said, Simon, nothing is worse than having a bad experience. If you get that, something in the mail of a product you already own, you're like, wait a minute, you don't know me. And that's a problem. That goes to the deep understanding of the brand and trust. It's like, how can I trust you if you don't even know me? So that's why this concept of personalization and really understanding your different customer segments and building strategies and understanding the frequency and what are the right messages at the right time, and then ensuring you've got the infrastructure to deliver it. And I think that's building both ends of it. Is the front end is what's the customer experience and what do you need in the back end. And I think that's a lot of where the energy is.
Yeah, absolutely. And often it's kind of where not necessarily is always visible to, the organization, internally. And certainly from, I always think to really sort of, build effective, brand and marketing, programs and campaigns, really it is rooted of, a depth of understanding about the customer, and, that's difficult to be enabled when you've got fragmented, siloed sort of, data warehouses and we struggle to get into that. Meredith, I'm going to just jump ahead to something which is something I know we were recently talking about. It was something that Nitin sort of touched on, the siloed nature of organizations. So data aside, just the siloed natures. I know we're talking a little bit about sort of building this customer-centric culture, into, and kind of, and it's not a new concept, let's face it, but it's really challenging, I think, for organizations and different teams across different products and services to sort of achieve. Just share some of your perspective on this customer-centric culture, philosophy.
Yeah, I think it's, like you said, easy to say, hard to do.
Yeah.
And I don't think anyone's going to argue with it either. It's sort of not debatable. So when you talk about it at face value, it's like, yeah, but of course we're customer centric. But then when you start to really delve into what does that mean? How do we operate? And I think one of the most important things in any organization is what do you measure, right? And so and that determines what you do. So whatever you measure is what you do. And if a lot of your measurement still is around sort of short term, around product and units, that can be more challenging, let's say, to really drive a customer centric or customer obsessed culture, because are you measuring the right things? And so I think that's almost job one. And that could be, I think that's the hardest hurdle in here, to create either complementary or companion metrics, or making sure you've got leading metrics that are really going to drive that organization to truly be customer centric, customer obsessed. And I think the other too is, understanding that even though you sit on loads of data, which we have so much data, sometimes we don't know what to do with it. I think understanding your customers is a very intimate process too, and really deeply understanding what motivates them. And I'm a huge believer in using ethnographics. Really, that's the kind of research where you go, you sit in someone's home and you listen to them for 6 hours and you watch their behaviors. You're going to learn so much. Yeah, it might be 10, 12, 30 data points, but it's understanding those behavioral things which bring enormous insights that you can go off and validate quantitatively. So I think it goes to, one is, how does your culture work? What are you measuring? Then two, are you actually doing the right kind of research to really help build an organization that truly has the customer centricity, customer obsession at the center?
Yeah, interesting. Yeah, we kind of use this term of, is this, rooted in customer research and understanding our customer, or is it more opinion-based design or opinion-based, marketing programs or campaigns, those sorts of things as well. Nathan, did you want to add anything to that at all about that sort of customer-centric culture?
So yeah, the one thing I'd add in is around maybe evolution of existing products with, again, a focus on that customer obsession. So a good example would be, think about the unbanked. So think about new immigrants, and Simon, you touched on obviously coming from overseas in New Zealand. So when you first arrived, as I did, from India many years ago, again, we don't have credit histories, you don't have credit scores, you don't have really, I guess, a basis here for going and applying for a mortgage, right? So what does that mean? So there's a new opportunity there for these FIs and lending institutions in terms of how do you leverage somebody coming in with a portfolio of experience, or even just younger generations starting out on their kind of financial journeys. And yes, you have to leverage the risk there and make those informed lending decisions. But now through AI and other innovations, you can again tap into these other data pools that you didn't have access to, and get maybe more evolved models of around the risk, and that can lead to, again, new products that can come to market. Certainly credit card offerings, I think they've been doing that for some time. So I think that I'm always keen on that aspect of it, as the products can evolve based on, again, that obsession with customer insights and customer data.
Yeah, and you've kind of, it's a really nice segue actually into looking at sort of the shift in demographics, and as a result, expectation. There's always a lot of speak about younger generation. We're all now talking about Gen Alpha, which I think what are they, born from 2010, which seems through to sort of now sort of thing. But you actually, so yeah, I mean, I came to the US 5.5 years ago, having owned property and having mortgage and having a very strong credit rating. But I arrived here in the US and we had no credit rating, and all of the financial institutions didn't, and I don't know if they didn't, if they couldn't, I'm sure they couldn't access global credit data, so here I was, at my age, and really I had no credit risk. So that's an example of an opportunity. You said this, Nathan, which I agree with. Obviously you have to assess the risk, but there's a big pull of opportunity there. Meredith, do you want to just talk a little bit about, demographics, not only looking at younger generation, but looking at family dynamics, etc.
Yeah, sure. I mean, we certainly know, to your point, the alphas, gosh, they were born, technology enabled, practically with chips in them, right? And you start to move up, right? And you get Gen Zs who certainly are, more native. And, as you move up the spectrum, there's a different comfort level, I would say, with technology. And so that's something, that we think about. And then, I was thought about, and also sort of attitudes towards brands. So we know there's just sort of some differences, and I think those are important. Those are sort of not table stakes, but important to understand kind of the continuum of differences. But there's some other things that might cross over, that might not be driven necessarily by age. So one thing has to do with risk tolerance, right? And we know in financial services, risk is a really important driver of some choices that you may need. And so you need to overlay that. Also, income, and income means a lot of different things. You could be 24 years old, be making $100,000, or 50 years old and making $100,000. That's something really, really different. So you can't look at it in a static way. The other thing, which I think has been really fascinating, and I think clearly this has evolved a lot, is just sort of the role of women, gender played an important role. And I think historically, particularly I'd say more on the wealth management side, was a little bit more male dominated. I think the industry's done a great job of bringing in more female advisors in really understanding how people make decisions. And again, risk tolerance is a really important one. We used to hear stories about, maybe, the male in the relationship had a very different risk tolerance than the female. And then you look at next generation, when people pass on, what happens to that money, and understanding, are you really in touch with that next generation and understanding what their needs and wants are? So I think, there's a lot of great information here, but nothing is that singular and focused. I think there's a lot of different layers and different ways to cut it. That's why I think having a more sophisticated kind of segmentation really serves you extremely well when you start to develop your not only sales, but your marketing and sales, but your service and the experiential.
Cool. Yeah. Which all links back to having trust in data, doesn't it really? How well do we know our customers? And also, what we know about our customer today is going to be very different in, 2 years, 3 years, 5 years, 10 years time. People's circumstances are changing constantly. So, how we sort of, I suppose, building and understanding and being on the journey with them as they move, through life, which is
absolutely
really, I think, interesting. Again, can be incredibly sort of complex. Nathan, we've talked a little bit about, technology. We've talked about innovation, AI gateways, those sorts of things. From your perspective, how are you seeing sort of AI, which, let's face it, is very much the shiny object at this moment in time, and I think, has a lot of expectations placed on it. But I'm just interested in your pulse on the market in terms of, how you are seeing AI be used, at this moment in time, to impact brand, customer experience, those sorts of things.
Absolutely, yes. It's hard to go for very many hours without the mention of AI these days in any form of media. So I think what we're seeing as we work with brands across different verticals, but especially in financial services, is AI is applied for on the marketing side, certainly for content. We're summarizing documents and think about this with wealth advisors, summarizing maybe if you're taking out life insurance policies, there's an applicability there. predictive modeling as you get into lending decisions. That's maybe a more advanced use case. Certainly code creation or code assisting, so your typical co-pilot type use case for new product development, application development, and the like. Certainly the most maybe prominent use of AI today, maybe the most widely deployed use case is around chatbots and virtual assistants, where a number of leading banks and financial institutions have these advanced chatbots and virtual assistants now available through, again, their web and mobile channels that basically solve the need in terms of interfacing with something a little bit, someone a little bit more advanced, and maybe not having to call in to your traditional call center. And again, they go through the authentication process, so there's a focus on strong authentication there, leveraging OTPs and other forms of passwords and the like. And once you're identified, in one or two cases, I've even seen voice-based authentication. And once you're past that stage, they basically have access to your entire profile, and they're able to assist you kind of more efficiently than you having to call in or to go into a bank branch. And those have been impressive advances. We're working with one investment banking client that actually leverages virtual assistants to assist their advisors on wealth management decisions for clients, thereby improving just outcomes. And going back to the example Meredith was stating, where if someone's a young professional, maybe a high-income earner versus somebody being on the cusp of retirement and at the tail end of their prime earning years. So those risk profiles being very different, and historically maybe financial advisors would have to dig into data trends manually and sift through data on their own using Excel spreadsheets, for example. Now leveraging these virtual co-pilots or assistants, they're able to get that at the tip of their fingertips, right? Again, through just mobiles and tablets and web channels, of course. So yeah, those have all been impressive. The other thing we're seeing is around digital accessibility and leveraging AI to meet more diverse needs around accessibility. As accessibility requirements grow from just ADA compliance now to the European Accessibility Act as well, can leverage AI to go through these vast arrays of websites and mobile apps as well, and pinpoint where there may be deficiencies or areas of non-compliance. Of course, there's a twofold benefit there. One is you want to be in compliance to avoid regulatory fines. The other is, of course, just to enhance the overall brand experience for users from diverse backgrounds and of all abilities.
Yeah, wonderful. Yeah, I mean, I think, virtual assistants, across the board, are a really super exciting sort of evolution, that is going to enable, humans, really effective. I'm really excited about the progress there. Do you if you were to kind of rate the level of risk aversion, across organization, or any trends you're seeing there, around the implementation of AI?
I'd say surprisingly, for a highly regulated